Good afternoon, good evening, and good morning, depending on where you're connecting from. Welcome to our webinar, Cryptocurrencies in the Trump Era. My name is Matteo Grassani. I'm an HSA alumnus, and I will be your co-host for today's event, together with Davide Robbe. During the next hour, we'll try to cover a few of the questions that investors generally ask in relation to crypto, Bitcoin, and digital assets. But before we start, Davide, would you like to give us a quick introduction of the HSA finance community?
Yes, thanks, Matteo. Welcome to everybody, and thank you for joining us for this very special occasion. Today is the official launch of our HSA finance community and our very first webinar. As Matteo was mentioning, I'm Davide Robbe. I'm one of the ambassadors of the community. But let me give you just a brief overview of the community. Our community is born under the values of HSA executive education, and I officially thanks them for all the support. And from the vision of 5 professionals that want to create something new and something meaningful for the world of finance. The founding ambassador are me, that I work for Intesa San Paolo as a director, then Matteo Grassani, that is a general counsel outside group, Giuseppe Siciliani, principal drilling at ADNOC, Marco Ferrarese, MD at SIA Partners, and Walter Lipolis, the head of the investment risk at PicTech Group. What is our community and which activities we will carry out? In our intention, we believe is more than just a common network. I mean, we want that this could be a dynamic platform, an ecosystem open to all the people, to finance professional, business leader, students, or service provider. And this platform will allow you to connect, to collaborate, to grow all together. The community is intentionally open to everyone that is interested in the world of finance. This is because we want to allow new conversation and cross-fertilization between experience level, generation, and industries. So this means that we need your participation and your contribution to rise and to deal with the new topics. So basically, we believe that this is your community, a place in which you can ask questions, challenge ideas, and share lessons learned or explore new frontiers. What does it mean, all these things in concrete? I mean, I think that we believe that thanks to the network and the knowledge of HSA, we can arrange several initiatives about cutting-edge topics with investors, academics, headhunters, and many others. So please stay tuned for the next initiatives. But let's start with today webinar that is about the digital asset. Just a very quick information, just to show your participation, please feel free to write in the chat if you're already if you already dealt with the crypto and with the digital asset, and feel free to ask a question. But let the floor to Matteo to introduce the panelists. Thank you.
Thank you, Davide. And as Davide said, it's a very engaging webinar, so please do type your questions and we'll have a Q&A session at the end of the webinar. But let's begin. So our panelists, we have Francesca Failoni, co-founder and CFO of Alps Blockchain. Alps Blockchain provides data centers for Bitcoin miners. Forbes included Francesca in the list of the top 100 leaders under the age of 30, so we're very pleased to have Francesca with us today. We have Professor Co-Pierre Georg. He's a director of the Frankfurt School Blockchain Center. He's an authority in Web3 blockchain technology, and he's also a visiting professor at various universities, including Columbia, MIT, and of course, HSA. We have Niccolo Bardoscia, digital head trading and investments at Banca Intesa. Intesa is the first bank in Italy and is one of the largest banks in Europe, and also is a pioneer when it comes to direct investment in Bitcoins. And last but not least, we have Marco Boldini, Executive Vice President, Global Policy and Regulatory Affairs at Terrapay. Marco is not only an executive and a businessman, he's also a lawyer, and a professor of financial services law. So we have a very good panel and we look forward to the discussion. So Niccolo, let's start with you. Let's go back to March 6, 2025, when President Trump signed an executive order for the creation, the establishment of a Bitcoin strategic reserve. After that, Bitcoin started rallying. I think today, when I checked a couple hours ago, was almost $111,000 per Bitcoin. So tell us, first of all, how did you feel that day? You are an investor in Bitcoin. And then walk us through what is happening in the crypto space after the US elections.
So first of all, thanks, Matteo. Thanks, Davide, for inviting me to this webinar. So going back to your question, I think there are like two major things going on after Trump's election. So on one side, we have seen quite a big policy shift from the US administration, but not just the administration. We've seen also regulators, the agencies, as well as Congress moving fast on crypto for the past few months. So as you mentioned, the White House signed an executive order recently to establish a strategic Bitcoin reserve. This was not the only executive order signed by the administration. They also established a digital asset stockpile for assets that go beyond Bitcoin. And they appointed a crypto czar, which basically has the task to make regulation more pro-crypto and repeal the anti-crypto rules that were in the previous regulation. As well as, they also did an executive order to promote dollar-backed stablecoins and prohibit a US central bank digital currency. So quite a lot of things from the US administration. And from the agency side, we've seen the SEC repealing Sub 121, which is basically a law that prevented banks to offer custody services to clients. And from the US Congress, we've seen the advancement of the Genius Act, which basically is the stablecoin law. And we've seen some progress on the market structure bill as well. So yeah, lots going on there. Of course, we've also seen some macro turbulence after Trump was elected. The tariffs, all this talk definitely had an impact on all asset prices as well as Bitcoin. So we've seen things that are positive for digital assets. We've seen things that are negative. Overall, I think if we look at the prices, Bitcoin is definitely much higher compared to before Trump was elected, as you mentioned. Other cryptos, not as much. So yeah, different things, a lot of things going on and lots of volatility out there for sure.
Thank you, Niccolo. And Co-Pierre, before we go a bit deeper into these topics and try to unpack what Niccolo has just mentioned, can you help us define what digital assets are? There's a lot of acronyms, crypto, digital asset, Bitcoin, tokens. So if you can help us define the terms digital assets and really how should we think about them?
Yeah, it's a very broad term. An asset, when I teach finance, an asset is always a claim that you have on someone else. A digital asset is just a claim that's recorded digitally, but that is a very broad category. I think one of the problems with Bitcoin, to stay within that example, is that it has changed sort of its nature as a digital asset. It started off as a payment system and it has failed miserably as a payment system. We have something like 4 transactions per second. The price is, depending on how you count it, $1.50 to, if you look at how much does it cost to create a Bitcoin transaction, it's somewhere between $50 and $60. So as a payment system, it never really took off. I looked the other day at sort of how many transactions, retail transactions, do we see in Bitcoin in Germany? And the data that I found was something from, I think, Bitget, like one of the major payments processors in crypto, and they had somewhat to the effect of $10 million in Bitcoin transactions in Germany in 2024 as a whole for retail. So it really is sort of, I don't think that has panned out at all. So the next narrative was it's a store of value. And I think that's sort of still out there. And often there's a comparison with digital gold, which I think is tricky because there's some major differences between, Bitcoin and gold. And maybe we can go into some of those later, but liquidity isn't what it is for gold. It's not, the regulation isn't quite where it is. volatility is much higher. You have substantial tail risks. Bitcoin dropped 80% or more 5 times since its inception. For gold, you never had seen anything like this. So the volatility, the risks are much higher. And then the latest is what Trump did. It basically turned Bitcoin, he basically turned Bitcoin into a strategic asset. And I think it's really important to interrogate that term, because it's not strategic in the sense of a strategic vaccine stockpile that you have in case of emergency and then you're going to use it, or a strategic oil reserve that you want to use to, you know, combat shortages of oil in your economy and smoothen them out. So what does it mean, a strategic reserve? So what I see is an authoritarian leader that undermines the rule of law and uses Bitcoin as an instrument of US power over other jurisdictions. And I think as Europeans, we have to answer the question, is that something that we're comfortable with? Is it something that we like? And I think the Bitcoin community needs to ask themselves, are we fine with that changing nature of the asset? Or is it something that we as a community feel at unease with? Do we really identify with the values that this president expresses? And for me, there's a lot of skepticism around this.
Thank you. I think you start noticing it's interesting. We have different opinions. We don't want to take any sides at this webinar. So, but Davide, you're next.
Yes, thanks, Matteo. Maybe we can move to Francesca. It is very important inside between our panelists because of her experience, but also because she's the only woman. So maybe I would like to ask to Francesca to explain us who are the miners who keep hearing about and what they do, and who are your clients in this space of the crypto. Thank you, Francesca.
Thank you for inviting me at this webinar. So miners, we can say, are the physical backbone of all like the Bitcoin system. So they are the ones that keeps it secure, and they validate the transaction and make all the network work. So we are not on the like cryptocurrency related services. We are like the infrastructure part of all this system. And sometimes we say we are the beating heart of the Bitcoin network, because we are the one to validate the transaction, we protect the network, and we use computational power to do that. So compared to like normal financial systems, miners do the work as the banks and the central banks to handle everything and make everything work. Mining right now is not an hobby anymore. It's a full-scale industrial operation that requires advanced infrastructure, because to do the mining activity, we need to create mining farms that are data centers, and so there are really significant investment. And this is also what makes all the network secure, because there are billions invested in this kind of activity, and it's like what is in the back of all the cryptocurrency system. Our clients depend, like we sell computational power to the mining pools that are the ones to do like the mining activity. Then we work with energy companies for the energy part. We have institutional investors who want to be like active players in these infrastructure projects. And so we think that mining is a crucial and constantly evolving part of all the Bitcoin ecosystem.
Thank you, Francesca. Very interesting, also because I'm involved in the energy sector, so that's very interesting analysis. Thank you. But let's move to Marco maybe now. No, Marco, let's get practical. Is Bitcoin a payment tool? Yes or not? And why are banks being challenged by alternative payment system? What do you think about it?
Hi, thank you. Thanks for the question, and thanks for inviting me. I think the short answer is at the moment, currently, Bitcoins can definitely function as a payment tool, but I don't see Bitcoins as an optimal tool for day-to-day transactions. And this is due mainly to some of the features that my colleagues raised before. And I'm referring to fluctuations in terms of the value, essentially. Sometimes because the vast majority of transaction in financial system requires stability. So volatility remains a big obstacle. Plus, it's also fair to say that banks are facing pressure, as you said, from alternative payments, essentially because innovations are revolutionizing how money are transferred. So if you think about the problem with or the necessity or speed of real-time payments, or a more inclusive way of making payments, less commissions. Obviously, this is a big challenge because it means for banks also to review their infrastructures, not only their products. Additional to that, traditional banking systems often impose regulatory and bureaucratic hurdles, making transactions slower and more expensive compared to these innovative digital payment solutions. So I guess, although Bitcoins, in a short answer, is probably not a perfect payment tool for the day-to-day transactions as of today, clearly it was a big push for banks to start rethinking the way they will evolve in future. But as we'll probably see in the next discussions with the panelists, I believe that until we will have the uncertainty on regulations and a fragmented way to regulate Bitcoins and in general cryptos, it will be very difficult to see the real power and the real remit of these new digital payments.
Thank you,
Okay,
Mark.
thank you. Thank you, Mark. Please, Matteo, maybe let's move.
Yeah, Co-Pierre, maybe go back a bit to your comment on Bitcoin as a strategic reserve, yes or no. What we see is, as you mentioned, a difference of opinion between the US and Europe. Europe is very much conservative in terms of whether Bitcoin can function as a reserve, strategic reserve. They say it's a software. The Central Bank of Switzerland more or less had the same position. India also, the Central Bank of India shared certain concerns. At the same time, in the US, of course, the situation is slightly different at the moment. So can you tell us a bit more about why Bitcoin cannot be or can be a strategic reserve?
It all depends on the question, what is a strategic reserve? What are you using it for? If you want to use it to smooth your own exchange rate, as you would have currency reserves, then it would require you to buy and sell that asset all the time. That's not what Trump announced. Maybe that's what they're planning. That's not exactly what he announced, right? He announced it as we just hold a bunch of Bitcoin. And by the way, we are not buying it as US. We take the crypto that we have seized from illicit activities, which somewhat contradicts this narrative in the crypto industry that there is very little illicit activity, but at the same time, the US has a lot of crypto already for that strategic reserve. So only one of the two can be correct. Either there's little illicit activity, or the US has a large strategic reserve that they have created. One thing that they might do is to actually sell gold from their gold reserves to buy Bitcoin instead. You can think about operational reasons and operational risks for doing something like that. For me, the main difference at the moment is that Europe is a firmly democratic union of countries at the moment, while the US is becoming much less so democratic. So for me, this is part of an attack of the institutions of the United States that is currently ongoing. One of the things that I'm genuinely concerned with is the idea of crypto and of Bitcoin in particular, of democratization of finance, of sort of more inclusivity. Like, this is being completely perverted at the moment by the governments that are being cheered on by the Bitcoin community. And it's not just Trump. You can look at El Salvador, where Trump deported someone without due process, where you had Bitcoin as a legal tender, and it completely failed in terms of user adoption. They all took the airdrop in the beginning, and then it ceased to exist as a payment means. So, like, is this really what we are comfortable with? And I would always say the European approach of being a bit tougher on these assets is rooted in our values and our value of the rule of law and sort of how we deal with potential illicit activity. But that requires us to take a tougher stance on these assets.
Yeah, clear. And of course, as you said, the executive order, yes, does say that Bitcoin has to be used as a reserve, strategic reserve, if they come from illicit activity. They also mentioned that they can buy more Bitcoin, but that has to be budget neutral without using taxpayer money. So that still have to be clarified what it exactly means. But I think your position is very clear, Co-Pierre. So if then we move to Niccolo, so a completely different position, I would say you are an investor. So you are agnostic, I would assume. It doesn't matter whether it's one color or the other, you are investing for a return over time. So one question that we always ask, and always been asked also in business schools, for example, what is Bitcoin and what are these crypto? What kind of asset class is it? Is it a yielding asset or is just a pure speculative asset? What would be your response to that question?
So if we talk about digital assets in general, I mean, it's not a uniform asset class. There are many different asset classes out there. But let's focus for a second on Bitcoin. So I think Bitcoin is neither really a speculative asset nor a yielding asset. There is no yield in Bitcoin. I think it was born as a speculative asset. It was actually born as a mean of payment and became also a speculative asset. But now I think it's trying to grow into something bigger, what I would call a digital commodity. So if you think about it, a commodity is an asset without an issuer. And Bitcoins are actually mined around the world. They're not issued by a central party, but as Francesca explained earlier, there are different parties mining Bitcoin all around the world using their computers. And this is actually what makes Bitcoin similar to a commodity. Now, it is also, if it is a commodity, it's also the first digital commodity. And this makes it very interesting because it invented digital scarcity. So nothing digital was scarce before Bitcoin was invented. So that is actually quite an interesting innovation from an economic standpoint, not just a technical standpoint. And also the other thing that really makes it interesting is that it's the only commodity where we can't really produce more of if the price goes up. So any commodity in the world, when the price goes up, people just go out there and find ways to produce more. With Bitcoin, when price goes up, more miners try to jump in to produce more Bitcoin, but this just makes Bitcoin harder to mine. There is a thing called difficulty adjustment that makes sure that Bitcoin gets harder and harder to mine. The more people try to mine it. So yeah, this is also the other very important innovation from an economic standpoint. And this is also why I think it's like Bitcoin is actually a real candidate to become digital gold. It's not there yet. It's still way more volatile. It's still much lower market cap. It's not as adopted as gold, but yeah, it is a candidate for the role of digital gold.
And a follow-up question, Niccolo, because again, from an investor perspective, some traditional investors say, well, yes, there is a finite number of Bitcoin, potentially I think is around 21 million or so, but nobody knows what happens in 2045 or so when the last Bitcoin will be minted. Maybe they will just decide to change the rules and create more Bitcoins. What would you respond to that objection?
Yeah, so first of all, it's 2,140, I believe, when the last Bitcoins are going to be mined. So I think we have plenty of time. Regarding to changing the rules, I mean, it is technically possible to change the rules of Bitcoin in the sense that if like a large majority of the community agrees that some rules need to be changed, they can be changed. It has been done in the past. But most of the proposed changes, like even much smaller changes compared to changing the supply, didn't go through. Actually what happened is some forks. So like new types of Bitcoins were created, like Bitcoin Cash. So yeah, there were like, but Bitcoin Cash is not Bitcoin. So basically they're like, I don't think a big change like changing the supply would ever pass. And if somebody did try to propose that, they would just make a fork of Bitcoin, and that fork would never be adopted or accepted by the remaining part of the network. So I'm actually not too worried about that.
Okay, that's interesting. Thank you very much, Niccolo. So, Davide.
Thank you, Matteo. I mean, my impression is that most of the common people, not retail, like a retail investor, for the most of the people like retail investor, it's not clear how the price of Bitcoin is defined. No? And we already explained that how Bitcoin is mined. I know that Francesca has developed a theory about how Bitcoin price is linked to the production cost. Francesca, can you kindly give us an overview of this theory and what you think about it?
So as we said, miners are like the ones who are producing the Bitcoin and putting them in the network. They are like the offer of the economical system. And for sure, marginal cost can be a key indicator because like it's Bitcoin price ultimately reflects the dynamic of balance of supply and demand, and that's normal in every kind of market. But there are some moments in which, for example, the price goes down, and at this point, miners can decide to sell their production and so put new offer in the market, or avoid to sell the production, or avoid to produce. And to take these decisions, marginal cost is a really important indicator, because whether they are producing with losses or not, they can decide to sell or not. And so what happens in sometimes in the market is that miners decide not to sell the production, and so there is less offer in the market. With the similar demand, we have the price going up again, and so really sometimes miners can make some work on like supply and demand in the market because of their costs of production. For sure, these kind of costs depend on the different miners, because there are many factors that can determine this marginal cost, that are the efficiency of the hardware, the price of the energy, the cost of capital of the miners, and many other factors. And so some miners can be arrived at the marginal cost at some like Bitcoin price, and some cannot. And there are a lot of studies of like listed miners and their marginal cost of production. So this can be a really good indicator. And connecting to the previous question about Bitcoin as a digital gold, this can be something that defines the lower price we can arrive and like make some dynamics in the market, but it's not the only one factor, for sure.
Thank you so much, Francesca. Very interesting. So Bitcoin is born to be decentralized, no, and not controlled by some regulator. But Marco, from a regulatory point of view, how do you classify Bitcoin? Is it a security, a commodity, or something else? And can investor protection and innovation really go hand in hand, in your opinion?
Thank you. And I think this follows up very nicely with what I said at the very beginning. I think Bitcoin is really a unique asset that does not easily fit into conventional financial classifications. We have seen that in the US, for example, the Commodity Futures Trading Commission had classified Bitcoin as a commodity, placing in the same category, roughly speaking, as oil or gold. However, clearly, unlike traditional commodities, Bitcoin is entirely digital, relies on a decentralized network for validation and securities. And unlike securities, Bitcoin does not represent ownership in a corporation or offer dividends, making Bitcoins completely different from stock of investment contracts governed by the security laws. Some other countries then decided to go a little bit beyond and classify Bitcoin as a currency, while others see it as a speculative asset subject to different regulation and so capital gains taxation. What I'm trying to explain is that it's very difficult nowadays to find a unique classification, and the fragmented way to classify Bitcoin is making very hard and difficult for investors to try and invest using Bitcoins without thinking about the possible consequences. However, allowing unchecked growth without safeguards obviously could expose investors to fraud. Hence, my point of a more harmonized framework. I still believe that all these talks that we are doing, the regulators that are trying to find a unique definition, are very good for investors, because at the end of the day, we are pushing the boundaries a little bit harder than in the past. And I believe that having a unique definition is no longer something possible in financial services. What I'm trying to say is that in the past, when you wanted to define something like a stock or a bond or whatever, it was relatively easy, because once you have defined, it will be the same forever. Can you imagine to try and define something that evolves so quickly and so rapidly with a predefined term of definition? It would be impossible. So my suggestion is to guarantee that investors can really rely on good definition and good regulation. We should change the way we regulate financial services or financial product, Bitcoin or general cryptos, giving a principle-based approach rather than a prescriptive-based approach. Easy to say, difficult to do, but obviously what I'm trying to say is that with all this thinking around, very good job for investors.
Oh, that's
Thank you, Marco.
Interesting. And maybe a follow-up quick one, Marco. How would you do it? Because today very much the regulation comes from the highest ranking of regulation, which is the law. Would you empower more the national authorities, or some? How would you do that?
So clearly, my preference would be to start thinking about specialized regulators for specialized products. Now, I know that the debate around that is quite hot, in the sense that many people say, no, please, we don't want other regulators because we are already very highly regulated. But what I'm saying is something slightly different, is an evolution, is taking away some powers from traditional regulators to give those powers to very niche and specialized regulators, which know very well the product, which know very well the issue here. And again, this is slightly similar to what we have read in the Khalifa review issued in 2021 by Mr. Khalifa in the UK. He was proposing very specialized skill set within the regulators. And my idea is maybe we are in a new era and we need a new regulator as well.
Clear. And Niccolo, I think going back also to the point you made before, if we take a step back from just the Bitcoin to the blockchain technologies in general. Generally, when you watch financial TV in the US, they always ask a question to the CEO of JP Morgan, Mr. Jamie Dimon. They always ask him about Bitcoin and crypto, and the answer is always the same. So stop asking me the question. There's just no scale. It's a small asset class. It's not going anywhere. It's been around for 15 years, but it's not growing fast enough for us. We are moving trillions of dollars every day, and we just don't see the scale. But the technology says, we have been using it for many, many years. The technology is real, and we think that we're just going to adopt it more and more. So if you look at the blockchain public versus private, how do you see the growth of the blockchain technology going forward, and how will it change traditional finance, if it will?
Yeah, so I think we are in the very early days of using blockchains in finance. And if we look at how blockchains are used today, basically 100% of the use comes from the digital natives, from transacting crypto, from decentralized finance. So yeah, but I agree with Jamie Dimon that crypto or blockchain is a technology to exchange value, and the potential is to go beyond just crypto trading. And in general, it is a technology that allows you to send assets like you would send an email. And this is very similar to what the internet does for information. So the internet is a technology to exchange information instantly across the globe. Crypto is a technology to exchange assets instantly across the globe. So when will DLT blockchain start being used beyond crypto? I think it's actually happening right now. Like, we are starting to see that, and we can just look at the stablecoin market, for example. I think stablecoins are the first use case of blockchain beyond crypto. Stablecoins are basically enabling a massive amount of dollars to be transacted every year. I think we're going past the levels of transactions that Visa and MasterCard are doing with stablecoins. And why this tokenization or this DLT use started from stablecoins? Well, because they're the simplest asset out there. Like, money is the simplest asset. So stablecoins give an answer of, like, how do we transfer instantly money across the globe 24/7 in a programmatic way at basically zero cost. And they're working, they're growing very fast. And after stablecoins, what I think we'll see is to have more and more like complex assets being transferred. Money market funds, ETFs, bonds, equities, all this is going to come, I believe. But of course, there are big challenges to get there. But the growth trajectory, I think, is very clear. And I believe in 10 to 15 years, most likely every single asset out there will be a token.
Okay, that's fascinating future, I believe. And on this one, Co-Pierre, also interested in hearing your perspective, because I know you've done a lot of studies where I think you even came to the conclusion that you could create a token of our privacy rights. So there's a lot of use cases potentially, but what use cases do you see for digital assets today beyond what Niccolo has just mentioned? Or if you see different use cases?
No, I think I agree on most of the use cases that Niccolo described. I think there's a growing and real sustained demand for tokenized assets, in part because blockchain and the comparison with the internet, I think, is a good one here. Blockchain is a protocol that allows a different kind of value chain for securities. And at the moment, the value chain is quite fragmented. You have clearing, settlement, trading, origination, distribution, safekeeping. All of these are sort of vertically, horizontally disintegrated. With blockchain, you create a standardization that makes maybe some of the current entities involved superfluous. Thinking of securities depositories. Do we really need them in a blockchain? Well, probably not. Probably they have to find a different role for themselves. So that makes it possible to streamline this process, make it cheaper. I think that's why institutionals are interested in this. And I think it's an exciting use case. At the heart of it, blockchain does something else, though. It's the first technology that I know that makes it impossible for a central operator to overwrite a digital entry. Normally, in traditional operating systems, traditional computers, what you have is a central operator that controls the computer. Back in the very early days, it was physical control. Then with Unix, it was sort of digital control. But you always had this administrator, the super user that could delete, that could block you from accessing it. With blockchain, that's not possible anymore. That means that we have a technology that makes digital entries, digital assets scarce. And for me, this is a game changer, because with that, you can do a lot of powerful things, including thinking about privacy and rights to control your data. Privacy is a really challenging thing for blockchain at the moment. In the EU, we have GDPR, Article 13, the right to erasure, and how that ever will square with the blockchain, I don't know. We have just a couple of weeks ago, we saw new guidance from the European Data Protection Board saying that wallet addresses are personally identifying information. How you can ever have Bitcoin or any crypto sort of compliant with GDPR, I don't know. I think it's a really hard question. But you can use combinations of privacy-preserving tech and blockchain to actually create control rights over your data. And I think this is a really nice application because it's digitally native. It speaks to a much more important asset class than digital collectibles like NFTs, which is personal data. If we can create property rights to personal data, I think that is an incredibly powerful proposition for the digital economy, one that clearly goes beyond crypto. The core of this then is, are there central controllers? And with most traditional cryptos, I would have severe concerns. With Bitcoin, you have, from the CCAF, the Center for Alternative Finance in Cambridge, you have something like 2 mining pools controlling the majority of mining in Bitcoin at the moment. They define sort of which transactions are added. Is that really decentralized? Is that the kind of decentralization we want and we need? And I'm not sure, but it's really important because without that decentralization, you can't get the scarcity, you can't get the uniqueness. So these things are interconnected, and I think we really need to think hard about how we assure this decentralization to provide the protection from copying.
Okay, thank you. And the way you see it when you say blockchain, you're thinking of a public blockchain, so a blockchain which is not controlled by anybody, or do you think that the evolution will always be that at the end of the day, somebody will have to have control, like
the problem with GDPR is that it explicitly references a central controller and as a sort of point of contact for your inquiries, right? With blockchains, you don't necessarily have this. I don't share the libertarian concerns that in Bitcoin or crypto in particular you have regarding central banks or institutions. I'm perfectly happy if a bunch of banks come together and run their own permissioned blockchain. For me, that is decentralized. I would be more concerned about the economic forces in crypto assets that lead to re-centralization. And we've seen this play out in Bitcoin in particular. There has been a massive re-centralization of mining power because that's how the economics works out. It's not what the protocol says. The protocol encourages decentralization, but the economic forces that are involved give us a re-centralization that erodes the basic premise of this asset. So I'm always in favor of establishing rules and a governance structure rather than trying to have a foolproof protocol, because economics and economists are very smart, especially when large amounts of money are involved. They will come up with creative ways to lead to re-centralization. So I think governance is a more powerful and probably a better protection from these forces.
Thank you.
Thank you, Co-Pierre. So, Francesca, we discussed about the importance of the energy cost in defining the price of Bitcoin, and about the fact that regulation are still weak in the sector. But consider that you are in the mining, no? Which is the future that can you see for that? No, because we can see that from a perspective, from a regulation perspective, things can change very fast, and also the geopolitical situation is quite complex, so can imply a rising of the energy costs. What do you think about it?
So Bitcoin mining is for sure becoming an integral and innovative part of the energy system, and it happens especially in places where regulation supports and encourages it. So it means that these two parts are really connected. So there is a really growing integration between mining and the energetic system. We can think about the example of the US, where there are some mechanisms as curtailment that help mining stabilize the grid, so the energy grid of some states, as example, Texas. And miners are paid by the grid to shut down their operations in some peak hours where there is too much demand of energy. So they can be really an important actor of some energetic grids. And it's easier in countries where regulation helps that. For example, as I said, in US, there are also regulations that define mining activity and that define how curtailment works. And so we can see like many listed miners that work in the US. There are other countries of the world where we can find examples of energy connection to like mining facilities. For example, with our company, we have many examples of mining that can give life to like hydropower facilities or like help the energy transition. We can find like listed companies, for example, Marathon in North Europe. They are doing projects to try to reuse the heat produced by the mining facilities to heat some cities. So for sure, there is an important connection between the energy and the mining sector, and regulation is a really important player. Because when we started working, there were no regulation on our sector, and it's really difficult to make important investments, find investor in a space that is not regulated. So we are really favorable to like try to regulate our sector, and we prefer to work in countries where this is kind of regulated. Also to have a more stable environment to make investments, and so have less risks in order to create mining facilities. Then we can see that technological innovation is making mining facilities more and more efficient. For example, hydro facilities, oil and liquid cooling, remote O&M, automation of the facilities. All these aspects are helping mining to be a really key player in the energy sector, and also to create mining farms in remote space of the world that can be a good example of reuse of the energy. That cannot be done, for example, with AI data centers, but with mining data centers, we create facilities in the Amazon forest with Starlink connection. So we can really be good friends to the energy facilities.
I was just wondering if I can ask a direct follow-up, because I've often wondered this point that you mentioned right now with AI. Bitcoin uses a lot of energy. I see the stabilizing function. There's research, even critics, I think, say, well, this is relevant and interesting enough to say maybe there is a positive benefit on renewables. But why not try to do something more productive than simply solving a puzzle? Like, this puzzle is like a lottery and nothing more. Why not try to use that energy in a better way? It doesn't have to necessarily be AI. You could have the search for extraterrestrial intelligence. You could have genome sequencing. There's a lot of hard computational problems that are yearning for energy and that would benefit humanity. Here, what you're doing does not benefit humanity. Why not use the most valuable thing that you can think to still achieve the same thing that you're doing by just cracking this puzzle?
I think it's quite an hour. We are speaking about like cryptocurrencies and all this environment and the benefits of this environment. This couldn't, like Bitcoin couldn't exist without mining. So because there won't be transactions that are verified. And so I don't feel that the critics of saying mining is not a good use of the energy can be a really good critics, because we need mining to make everything work. And you can have the opinion that AI is better than mining. That's your opinion. But other people can think that mining can be a better choice. In addition to that, there are many examples of using the energy for mining that this energy wouldn't be used for anything else. For example, we have some data centers in the Amazon forest directly with the hydropower facility. This hydropower facility is not connected to the grid because it's in the middle of nowhere, so it couldn't sell the energy to the grid. And there is no good internet connection, so it's impossible to have any kind of other data center because we are using Starlink to make miners operation work. And so this is a clear example of mining that can benefit the energy sector, can make a hydropower center work, and gives a lot of work also to the local people. So it can be, it can have also a social impact. This is one example, but it's similar for the data centers we have in Oman, where we are creating some renewable energy facilities thanks to our mining facilities. And it's our example, but it's like the same for the other listed miners. So that's my answer, I would say.
I can also confirm that a lot of energy players are using wasted energy, for mining Bitcoin. So that's an interesting new trends. But speaking about new trends, Marco, I read about the growing importance of the stablecoin for the public debt of US. No, so it seems that stablecoin are expanding really fast. What do you think? Are they a threat or an opportunity for banks and for financial intermediaries?
Yes, good question, and apologize in advance. After this answer, unfortunately, I have to leave as anticipated. I have a meeting already started, but I think this question is actually very relevant because clearly stable coins present a fantastic opportunity, for example, in the remittance space, in the supply chain finance, in payroll payments, or even for institutional financial operations, for all the reasons we have seen earlier. However, obviously, stable coins still pose a risk to the banking sector by reducing reliance on traditional savings, demanding for additional safeguards. For example, one of the most significant concern for financial regulators is ensuring that stablecoins issuers maintain sufficient reserves and meet compliance standards. And for that reason, regulatory scrutiny is rising, particularly in major financial centers like the US and Europe, where all the lawmakers are trying to work to establish frameworks, as we have seen, for stablecoin governance. And here, bracket, maybe a different regulation just for stable coins would be more interesting and more reliable than what we have today. Banks that proactively explore stablecoin-based solution and collaborate with fintech providers will certainly benefit from emerging opportunities rather than being disrupted by them. And this is a cultural problem where banks see these kind of things as opportunities and new entrants to the market as a good opportunity to work with them rather than potential competitors. And I think this is something that has to do with the mentality of bank-centric countries like we have, for example, in many European member states. But also in real life, stable coins can be extremely interesting and useful. Take, for example, e-commerce and payments, where some merchants and online businesses can integrate stable coins, as we are already seeing in some cases, as a payment option, allowing customers to transact with digital assets, bypassing traditional card processing fees. Or for institutional settlements, where major financial institutions and corporations are exploring how stable coins for interbank settlement and treasury operation can enhance liquidity management, which of course is a big saving. But of course, a large part and portion of stablecoin activities are still concentrated on trading platforms. So as regulatory clarity improves and mainstream adoption increases, stablecoins, in my view, will likely become more integrated into everyday financial transaction beyond exchanges, but not because I'm a lawyer, not because I work in electronic money institution company, but I'm a strong believer of the fact that lack of clarity on regulations make all the actors involved a little bit anxious and nervous and less inclined to evolve. We have seen a lot of potential attempts from the regulators to try and overcome this issue, regulatory sandbox, consultation documents. But my view is that we need to do something more to guarantee to these new instruments, stable coins particularly, to have a very strong journey throughout the finance world. And if there is something to correct and to amend, I think we can intervene on time, provided that we have very skilled regulators and very skilled people working within the industry. Working with stablecoins and fintech is not just sexy per se. It's a very difficult and tricky territory, and we need specialized.
The territory was too tricky.
I think, Marco, we got the gist of it, and thank you very much for joining us. Maybe, Niccolo, picking up on stablecoins, because if we started with Bitcoins, we moved to the blockchain technology. Now these stablecoins, they seem to be the hot topic these days. The European Union has already regulated with the MiCA regulation, but the European Central Bank stated recently that they would like to see more action in the stablecoin space. There are risks, but they're also worried that the stablecoins issued today are basically, and maybe you can explain what a stablecoin is, but they're backed by US dollars. So they see it as the US, there's a dollarization basically of the world economy to some extent. But at the same time, we see size is still at the very beginning. We see that the stable coins, I think roughly the market cap is $235 billion, but 90% of that is represented by one single issuer of stable coins, which is based in Salvador, and I understand is very much active in the southern part of the world where dollars are scarce and there is a forex issue. So from a practical perspective, use cases, you are an investor. So how do you see the stable coins moving forward today? Is it more an opportunity to trade stable coins for their value or the spread or arbitrage? Or, well, actually, it will become sooner or later just a mean of payment, and that's the natural course and future for the stable coins. What do you see from your position?
Yeah, so first of all, a stable coin is basically a token that holds a one-to-one ratio with an underlying official currency like the dollar or the euro. As you mentioned, basically all of them are US dollars right now. We don't really have a euro stablecoin market as of today. We do have some very small players. The largest euro stablecoin is actually issued by a US firm, which is Circle. So yeah, it's very, very much US dominated market, even though stablecoins are mostly used outside of the US and outside of Europe. So in emerging markets, there is a lot of use of stablecoins. So yeah, I don't think stablecoins are like too interesting from an investment point of view. I mean, they're stable, right? So they're not supposed to be traded for profits. They're more, they can be used, I think, for two things. One is payments, and we're starting to see some of that. And the other one is settlement of financial transactions, especially in tokenized form. So, so at Intesa, for example, last year, we bought a digital bond issued by CDP, another Italian bank, for $25 million. That was issued on the Polygon blockchain. And for that solution, we actually used CBDC pilot within the ECB trials. But you could also use stablecoins for the settlement of transactions. And stablecoins actually make the settlement easier. Like they can actually provide atomic settlement. So when I buy the asset, I pay on the other side with a stablecoin, and that actually reduces risks in the system. They can be used also to do intraday repo. So for example, I could be able to lend a bond for just a couple hours against a stablecoin, and then get the bond back and repay the other leg. So yeah, there are quite a few things that you can do with stablecoins. One day you might be able to go to a bank and get an instant mortgage in stablecoins against your tokenized home. So yeah, I mean, stablecoins are already a reality today. They're growing fast, and there are a lot of cool things that you can do with them to make financial services better and cheaper for clients. So yeah, I think they're very interesting indeed.
Excellent. Thank you, Niccolo. And thank you, Francesca and Co-Pierre and Marco. I think we're coming to the end of our webinar. So just a last quick fire question, 30 seconds or less to each of the panelists. We talked Bitcoin, stable coins, tokenization. imagine yourself 5 years forward. What will matter in 5 years? Which of these three items we discussed will be the real thing, the biggest one? Starting from Niccolo, you are on my screen, so I ask you first.
So Bitcoin in 5 years, stablecoins in 10 years, and tokenization in 15 years.
Okay, excellent. Francesca, your view?
I agree with what Niccolo said. So first, Bitcoin must be used and spread to as much people as possible, and then we can see other applications as tokens and stable coins and whatever.
Thank you very much. And Co-Pierre, you have the last word then from your end.
Yeah, maybe the time ordering is right. I'm not sure if it's a sort of a good thing. I see Bitcoin more like Teflon and forever chemicals. I don't think it's necessarily good to spread it to as many people as possible because it's a redistribution engine at the moment. But I think it's going to stick around for a little longer. The systemic risks that are emerging are so big that I wouldn't want to have to predict when it fails. But they are mounting, and systemic risk rises, under the surface for a long period of time and then abruptly unravels. I think stablecoins are probably the most exciting, and I hope that we'll see more public stablecoins, meaning central bank digital currencies, because there are great opportunities, and the ECB could easily open up their facilities to e-money providers so that we have perfectly stable coins. At the moment, they're not doing it, but I think that would actually help to create like a competitive European offering.
Excellent. Thank you very much. Davide, any last comment or question we received?
Matteo, there is a question in the chat that is the following. I mean, where do you see opportunities for aspiring entrepreneurs to enter the space? Which countries is most competitive to start mining? I don't know if someone wants to reply.
Maybe for the mining part,
Francesca, yeah.
I can reply. So it depends on the opportunities you can find, for example, and on the scale of the operation. US right now is the easiest way to enter the mining space because there are a lot of opportunities both for creating the infrastructure or for hosting. So it's kind of easier to start there. But I think it's not the most interesting one. We are working on having like different countries and where we work. We have Oman, we have Europe, we have South America, because we think diversification is also important in the mining industry. Every country has pros and cons as usually. For example, Middle East is difficult to start working with. But then if you have a scale operation, it's really an interesting kind of environment. So really depends on the scale, also the contact and the network you can have. Opportunities for entrepreneurs to enter this space. Again, there are many opportunities. I can speak for the mining part, but like the other speaker can give different examples. I think that in general, it's a kind of sector that has to be developed a lot, and so there are many opportunities. The key is find something that can be interesting. There is a problem that has to be solved, and this can be like the business strategy of your company, and then go on and try to create something that has a value.
Excellent. Thank you, Francesca, and thank you again to the panelists for a very insightful conversation and discussion. Thank you for the audience for being patient with us. We did not, of course, we have not addressed all the questions. We wanted just to have a brush on this topic, but we think it's an exciting one. It's an area which is changing fast. We learn about the push coming from the US, but we also learned that the market is working on digital assets anyway. And so it's interesting to see when you start scratching the surface that you see that the market at the end of the day is always ahead of everything else. And we see there are lots of use cases, and time will tell. As Francesca said, I think is a good way of closing. A lot of opportunities, which also means in financial terms, risks as well. But at the end of the day, I'm sure that risk-adjusted return, that's the usual mantra. So I thank you for attending this webinar, everyone. If you have questions, suggestions, please come to us on our LinkedIn page, follow us, or by email, reach out to us. If you want to contribute for future event, please let us know. And until then, I wish you a great day and a very, very good weekend. Thank you all.